Today, I will examine Revolut's international entrepreneurial journey. The presentation looks at how the company expanded internationally, what supported that growth, where the main weaknesses emerged, and what its future path may look like. Revolut is a London-based financial technology company founded in 2015 by Nick Storonsky and Vlad Yatsenko. The firm began by offering cheaper foreign exchange and international money transfers through a mobile app, then gradually broadened its services to include spending, saving, investing, borrowing, and business accounts. Revolut's internationalization pattern is best described as rapid, wide in reach, and increasingly large in scale. Founded in London in 2015, it launched with foreign exchange and international transfers at the center of its offer. So cross-border use was built into the venture from the outset rather than added after a long domestic phase. That starting point helps explain pace. By the end of 2024, Revolut had 52.5 million retail customers and more than £1 trillion in annual transaction volume. Figures that show how quickly the firm expanded within less than a decade. Growth did not flatten in 2025. Revenue rose from £3.1 billion to £4.5 billion, while customers increased to 68.3 million, which points to continued enlargement rather than early saturation. Scale and scope also stand out. Revolut now reports 70 million personal customers, 500,000 business customers, and support across 160 countries and regions, so its reach extends well beyond a narrow regional presence. Taken together, the case fits the broad logic of a born global or international new venture. Since the firm pursued cross-border value creation early, at the same time, its later move from fast-growing fintech to more deeply embedded banking player has required staged regulatory approval, as shown by the UK license process completed in 2026. What explains that speed? Revolut paired product innovation with a business model that kept widening without losing a clear core. It started with low-cost foreign exchange and transfers, then turned the app into a broader financial platform spanning cards, savings, investing, business accounts, and subscription tiers. That shift mattered commercially. In 2024, the group reported growth across all business segments, while wealth revenue rose by 298% and active business customers increased by 56%, which suggests that innovation at Revolut did not stop at the original payments product but kept opening new revenue streams. Resources and capabilities help explain why that expansion held together. Revolut operates through a single app-based architecture, adds adjacent services quickly, and earns income from a more varied mix than many challenger banks, including card fees, subscriptions, wealth products, and interest income. From a VRIN perspective, the strongest asset is not one product on its own, but the combination of software capability, data-rich customer activity, brand familiarity in cross-border finance, and the organizational ability to launch and scale products at pace. The founding team also fits this pattern. Nick Storonsky brought foreign exchange and derivatives experience from Credit Suisse and Lehman Brothers, while CTO Vlad Yatsenko brought software engineering experience from finance and real-time systems. Together, they gave the firm a mix of commercial focus, technical execution, and risk-taking behavior that aligns closely with entrepreneurial orientation. Revolut's weakest point has been less about attracting users than about building the control systems required for deeper banking expansion. As the firm grew, regulators questioned whether its risk controls were keeping pace with the speed and complexity of its international operations. That concern helps explain why its UK banking journey moved through a restricted license in 2024 and only reached full launch after the mobilization stage in March 2026. Reuters also reported that many customers still used Revolut as a secondary account rather than their main bank, which points to a softer but still important weakness. Strong usage in payments and foreign exchange did not automatically produce full banking trust or primary account status. The company's own reporting supports this reading. Revolut's 2024 annual report and related regulatory disclosures identify financial crime compliance, regulatory compliance, risk management, data governance, and operational resilience as major control areas. Seen this way, its main constraint lay in matching rapid international growth with tighter regulatory and organizational demands. Revolut's home market push came less from a small domestic market than from a mismatch between what many UK-based users needed and what incumbent banks were offering. The company states that it was launched in London in 2015 to change the way people spend and transfer money abroad, which shows that cross-border friction in the home market sat at the center of the opportunity from the beginning. This aligns with Oviat and McDougall's view that some ventures are shaped by cross-border opportunities from inception rather than by a long domestic buildup. London also placed Revolut inside a crowded banking environment dominated by large established players, and Reuters reported that its UK banking launch would intensify competition with banks such as Barclays, Lloyds, and NatWest. Once the model gained traction, staying UK-focused would have constrained a service built around international payments and foreign exchange. In that sense, the home market push was not simply domestic saturation. It was the pressure to move beyond the limits of legacy banking and scale a service whose core problem was international from the outset. Revolut was also drawn outward by what host markets could offer. Its service was more likely to gain traction in places where people already moved money across borders, traveled frequently, used mobile finance comfortably, or faced gaps in traditional banking. That helps explain why Revolut expanded beyond Europe into markets such as Singapore, Mexico, and Peru. In Singapore, the company used the city as a regional base for Southeast Asia and built on local partnerships, which suggests that the market offered both digital readiness and ecosystem support. In Latin America, Reuters reported that Mexico's large, underbanked population and strong remittance flows made the market attractive, while Peru formed part of a broader push into high-growth markets with widespread smartphone use and unmet banking demand. This fits Dunning's location advantage logic. Firms expand where local conditions improve the value of what they already do well. For Revolut, the pull did not come from one factor alone. It came from a combination of digital adoption, cross-border payment needs, and host markets where a more localized banking model could unlock further growth. Over the next 5 years, Revolut is likely to keep expanding internationally, but the nature of that expansion will probably change. The earlier phase was driven by rapid customer growth, broad market entry, and a service built around cross-border payments. The next phase looks less like simple geographic spread and more like deeper market embedding. In other words, the key question is no longer whether Revolut can attract users in new countries. It is whether it can turn that usage into stronger banking relationships, broader product adoption, and more stable regulatory acceptance. That shift creates room for further growth. Markets with high mobile usage, unmet banking demand, and strong cross-border payment needs should still offer opportunities, especially if Revolut can localize its services more effectively than traditional banks. Yet, the pressure will rise at the same time. More licenses, more lending activity, and deeper local operations will demand tighter control systems, stronger compliance capacity, and greater customer trust. My view is that Revolut will remain an important international fintech player, though its success will depend less on moving fast and more on proving that it can operate as a credible long-term banking institution across different national settings. To conclude, Revolut's case shows that fast international growth is not only about entering more markets. It depends on whether a firm can turn an early cross-border opportunity into a wider, more durable business. Revolut did that through platform expansion and strong market reach, but its later progress now rests on something harder: deeper trust, stronger control systems, and the ability to operate credibly across very different national settings. And this is my reference list. Thank you for your listening.